Britain's former Foreign Secretary is urging Prime Minister Theresa May to scrap her faltering Brexit plan. While writing in the Daily Telegraph, Boris Johnson condemned the government's handling of Brexit talks whilst laying out his own ideas on how to exit from the European Union. Now, it's all ahead of the Conservative Party's annual conference next week. Joining us is the Confederation of British Industry Economics Director, Rain Newton-Smith. Rain was once at the Bank of England looking at a risk assessment framework for the UK. After that, she was head of emerging markets at Oxford Economics. So thank you so much, Rain Newton-Smith, for joining us today. I want to start with the economics of things before we migrate to the politics. The UK current account deficit widened more than economists forecast in the second quarter. How difficult is this going to be as we, manage Brexit, as Britain prepares to manage Brexit?
I think, look, what's most important is that, as you say, that the UK negotiates the best possible agreement with the European Union. That's what's most important for our economy at the moment. We need to get the withdrawal agreement secured, which will allow us to enter a transition period with the European Union. That should last between March 2019 till December 2020. That's when we can also negotiate all the details of our new trading arrangement. But I think we also can't forget the domestic economy in the UK. There's a lot we need to do to make sure we have strong business investment growth, to increase our productivity. And there's a whole series of issues that both business and the government need to do to get that domestic economy firing on all cylinders.
Right, but it's very clear that Brexit has definitely put the current account back in the spotlight. Will foreign investors be willing to keep financing the deficit by buying British assets after Brexit happens, depending on what kind of Brexit we have?
I think what's most important is that we have a smooth transition to a new relationship. I think what investors want is a sort of certainty around that. And I think, again, at the moment, actually, UK exports have increased over the past 6 months. Manufacturing in the UK has enjoyed a bit of a recovery. I think for investors to feel confident about the UK over the long term, we need to make sure that we have the best environment to invest. We've done a lot. It's important to remember there's a lot of fundamentals in the UK economy that are incredibly strong. We have one of the lowest corporation tax rates in the G20. We also have the highest employment rate since records began. We've created a lot of jobs here in the UK. We have an advantage in terms of language and time zone and a very vibrant and growing tech and digital sector here in the UK. So I think there's a lot that the UK can build on. But what's most important over the next few months is securing that withdrawal agreement from the EU.
OK, what are the chances of a no-deal Brexit? And what does that mean for interest rates for Mark Carney?
Look, there's always the possibility of a no-deal arrangement, and I think that is the biggest concern for businesses at the moment in the UK. It's clear that a no-deal scenario would be bad for the UK economy. It would also be bad for the European economy. So that's where efforts need to be focused on avoiding that. I think in terms of the path for interest rates, I think what Mark Carney has been clear about is that a no-deal scenario would be damaging for the UK economy. It would have an impact in the short term on our demand and over the long term on our supply. So, the future path for interest rates in that scenario is really one for the Bank of England. But my sense is that we would see a negative impact on demand. And I think that would be forefront of their minds in terms of the policy response
Rain, were
that to happen.
With an organization like yours, the big companies get all the press, I don't know, British Telecom, Rolls-Royce, whatever. Tell us about mid-sized businesses in the United Kingdom and Brexit. Tell us about not the little guy, but the bulk of service sector and goods producing mid-sized businesses. How hurt are they by all this madness?
Look, it's really difficult for those mid-sized businesses, and I think that's one of the challenges. When you talk about bigger businesses, they've got the resources to prepare for a whole range of scenarios. But if you're a mid-sized business, maybe supplying into the oil and gas sector or to big car manufacturers, and you're trying to think, what are the range of possible scenarios? What does it mean for my business? What kind of tariffs could I be facing? What kind of differences in regulation? And also importantly, I would say it's also about people. I think that's one of the things people don't talk enough about is, there are 3 million EU citizens working here in the UK. They help to drive our medium-sized businesses, and there's a lot of uncertainty around their future if we ended up in a no-deal scenario. So the thing that smaller and medium-sized businesses talk to me about is they just don't know how to plan for the range of scenarios, and there's still a huge cloud of uncertainty over how they should run their business over the next 6 months.